Hello everyone, this is Ming Jong. Welcome to another episode of the Daily Market Analysis for the S&P 500 E-mini futures for the session of 21st of October. In this video, I'm going to share with you the market recap from yesterday and also a trade review in the 3 minutes time frame, which I will explain in detail the entry, the exits, and also the rationale behind. And in the trade review section, I will elaborate a bit more on the one thing that we as a trader must do when we are trading the false breakout. And this is very important as it will increase the winning rate when we are doing that. And going forwards, during the market outlook section, I will also share my trading plan together with the levels that I'm watching as well. So do watch out for that. Alright, so let's get started. So we can see that in this daily chart for the S&P 500. So yesterday we kind of do not have the downside follow through right after this weakness shown up in the previous day. So I was expecting some kind of the weakness or continuation to the downside, but yesterday was slightly we up a bit, but still we see quite a lot of the rejection, especially at the resistance area. And as usual, we have a consistent supply level for the past 6 sessions as shown in the volume session here. So the only bullish character or bullish sign we have is there's not much downside follow through for yesterday's price action, but still we did not rally through the danger point, which I will show it to you later in a market outlook. Alright, so let me get down to the hourly time frame and let's talk more on the yesterday market. So we can see that yesterday, just prior to the US session, so that's the US opening at around 9:30 p.m. my time zone, and subsequently you can see that we have a rally up and then followed by some rejection that's right at the resistance zone 3450 to 3460. So you can see the rejection tail here, and that's the previous resistance zone. And subsequently we have the reaction or the pullback and tested the low again. So that's how it went for yesterday's session. Prior to that, I don't think there is much happening prior to the US session. We are in a very tight range and have this uptrust type action, temporary commit above of the previous swing high, and then followed by a failure, reaction down. So everything just happened right at this resistance zone here. So you can also consider this as the supply zone or the supply bar, and the resistance zone extended to around 3460. So we should definitely see quite some rejection in this resistance zone. Alright, so let me just show you the 3 minutes time frame. I have a trade to show you, and this is a false breakout trade, and you can definitely see that there is one thing that I always do in order to increase my winning rate when I'm trading the false type of the breakout. So this is especially important when we are doing the false breakout trading. So let me give you a bit of the context now. So just prior to that, we kind of have the S&P 500 stuck within this trading range. So this is a bit tricky, so a bit of rally and then followed by this trading range. So if I remember correctly, yesterday I do talk about a possible short entry if we see some rejection from the resistance zone from about 3550 to 3460. So that's pretty much the resistance zone that we are looking at. And you can see that this kind of the trading range, we only have 2 types of scenario. So the first one, obviously the bullish type, is anticipate a breakout right here. Second type, like what I took yesterday, is definitely the false breakout. So either way, in day trading, I would just like to keep my neutral stance, because although yesterday my bias was kind of to the downside, but it doesn't really rule out kind of the breakout, retest, and continuation to the upside. So it could happen as well. So we just need to be careful when the price is approaching the resistance level. So the first thing that I'm trading this false breakout is I define the resistance, and when I see the price approaching the resistance like this, so we have a kind of a big bullish bar and with a slight increase of the volume and together with a reaction, but despite the reaction comes with increasing of the supply, but look at the results. So it doesn't really go a lot to the downside. In fact, it's just kind of tested halfway of this momentum bar. So it's just have this kind of the grinding action to the upside. And this is a bit tricky because whenever the market doing this sort of thing, like grinding up without a lot of the action to either side, so it can continue for some time. So in order to avoid early entry, like I know that some people or some trader would like to place a limit order, something like this. They define a swing high, they probably just limit order, enter short right at the swing high level. But this is a bit dangerous because we never see the confirmation, and whenever the price approaching the resistance, it doesn't really necessarily mean that there will be a reversal and go all the way down. Sure, they might have some kind of the pullback, something like this, pullback, another pullback, another pullback. But if there is no follow through to the downside, then it could just go up again and have another breakout. So one thing that I would like to do, and it's a very important thing, I think this is the one thing that every trader must do when they trading the false breakout, is to identify which side is winning, whether the demand is winning or the supply is winning. So just think about this. Which party is winning? Are we seeing the demand is dominating, or are we seeing supply is dominating? Because the resistance right at the swing high level, about probably 34.50, and also the previous resistance zone, so that is quite a natural place for the price to have some reaction. Maybe it's a pullback, or maybe it could become a reversal or the start of the downswing. So in this case, we need to identify whether the demand is winning or the supply is winning. So in this case, I always like to look at how's the volume doing. So you can see that this bullish bar, the momentum bar, followed by the increasing of the supply, but look at the result, it doesn't really go anywhere. Subsequently, we have this grinding action to the upside. So until we see this reversal bar or the key reversal bar, there isn't anything that shows the confirmation to go short because the volume is generally lower. So this sort of thing, like grinding up action, can continue for quite some time if we did not really see an increasing of the supply level. So this bearish bar, apart from kind of the key reversal bar or the bearish engulfing bar type, we also see the spike of the supply. So in this case, I know that we do not have the demand on our side. So supply is dominating because we see the increasing of the supply and also reflected in the price action as well. So this is where I actually go short, where I enter the short entry, and I anticipate to at least write it down to maybe the swing low here or this swing low here as well. So right after I enter the short entry, it's kind of going nowhere. You see this trading range, kind of upsloping type, and we see this some supply tail and also some demand tail. So it's kind of going nowhere. So both sides is just, well, doesn't really want to make a decision at the moment. That's why we see the tail to either side, like to the upside and to the downside as well. So until the bear show hands, I initiate a breakout with this bearish bar, and then followed by this ultimate capitulation bar with the spike of the supply. So a lot of the supply come in this bar, but there's also some demand come in as well, because that's quite natural at the swing low level. So I just managed my trade using my trailing stop, kind of halfway of this bearish bar, and eventually I got stopped out probably at this tail here. So that's the bullish bar that actually stopped me out. So overall, I still have a profitable trade, about 1.2 reward to risk ratio. So not too bad, although it's not extremely profitable, but still it's a profitable trade. I am happy about that. And subsequently, I just did not do anything else apart from this short entry, but I do think that there's possibility to initiate some kind of trade to trade it to the upside, like to ride it up. So depending how you manage your trade, this uptrend or the upswing could be a nice trend for us to trade. And you can see that subsequently, right after we testing the 3460 and 3450 level, we just have this kind of the temporary commitment, and then followed by a failure, inability to rally, and then eventually just fail right here. So we have seen a big spread bearish bar together with the increasing of the supply. So at the end, just close near the low. So this is not very bullish at all. And okay, so this is the trade that I want to show you. And hopefully next time that you want to trade the fourth type of the breakout, always remember to ask yourself, so is it demand is dominating or is it supply is dominating before you enter a short? Because without the proper supply, it could just simply do a very brief pullback and show the continuation to the upside. So we need the supply to push the price down. Okay, so let me just talk about the current market condition. So we are at the hourly time frame, and let's have a look here. So you can see it clearly right now. Maybe I can just extend this resistance line a bit. So this line 3460, so previously as a resistance and then turned support here, and once it broke down, and that become the resistance again. So we have seen some rejection at the level 3460, followed by a sharp reaction. And during the Asian session today, we have seen the price rally to still, this is the 3450 to 3460 resistance zone. So showing the inability to rally up and commit above. Instead, it just kind of stalled right at the resistance zone, and eventually it just fell right here. So we have two big bearish bar fail and kind of tested the previous day low here. So there's a previous swing low. So right now it's still testing the level. I think we are still at a very vulnerable position. So despite yesterday we did not have the downside follow through, but still we see the rejection. If you take a closer look here, there is an increasing of the volume to the upside in these two bars. So these two bullish bar, we have an increasing of the volume. If we compare it to the previous session, definitely the volume increasing. Yet we did not see the commitment to the upside, like to have a proper breakout and commit above the resistance level. So definitely supply is present, and eventually we see the results follow right after these two bullish bar. So here's the results shown up. So supply is still present, and currently we have this reaction again. So it's still rejected from this supply zone. And I think if we did not see a commitment above 34.50 to 34.60, then it is quite vulnerable to break below the swing low around 34.10. So yesterday video I do talk about the next level of the support based on the previous trading range, somewhere around 33.85 to around 34.10 or 34.20. So this will be the immediate support level if the level fail, or if we can't just commit above, then definitely I think we'll see a further downside follow through to test at least the support area here. Okay, so for the later part of the session, I'm still looking at the resistance zone, which I talk about from 34.50 to 34.60. So that's the resistance zone. I want to see some kind of the rejection. And one thing to mention, if you see this trend line, the downtrend line is still in play. So definitely I want to see how the price react from this resistance zone right here, 34.50 to 34.60, because there could be a potential short entry around there. Otherwise, maybe there is some chance to long near the low here. Let's see how the price react at the key levels. Otherwise, also pay attention to some bad news coming out. Maybe that will trigger the market sell-off, initiate some kind of the breakdown, pullback, and continuation to the downside. So that's possible as well. So one thing that's showing some bullish sign is if we take this as a shortening of the downward thrust. So you can see that the thrust to the downside is a bit shorter, but that is still very early call because we still need to seek for confirmation. At the moment, the demand is still weak, and we can see that the rally is very weak as well. So we just need to see the price which can commit above the immediate resistance level, 34.60, and followed by this next level about close to 3,500. All right, so just pay attention to these key levels and to see if there are some kind of the reversal trade you can take from there. This is the end of the video. Hope you enjoyed it. If you'd love to learn more on other strategies to increase your winning rate, definitely check out the video shown on the screen, and do remember to subscribe to my channel to get similar quality videos like this. Thanks for watching. I will talk to you soon.